Yeah, Kunal, do you concur? Further weakness in store for IT?
Yeah, further weakness in store, and we were discussing larger term, the longer term trend for the IT stocks is on the downside. Of course, over the last couple of days, these stocks were also getting into an oversold territory, so we're expecting a bounce for the IT stocks. But I think what this could also instate is that that the longer term trend for large cap IT names, that could be a concerning point, because there was a point in 2024 till the second half that the likes of Infosys, for example, started to show signs of outperformance. You saw traces of outperformance coming back into HCL Tech Mahindra. That I think is likely to reverse for the IT stocks over the medium to long term.
Well, this, even though, Accenture has actually raised the lower end of its annual top line guidance on growing demand for its services to help clients integrate the AI-powered tools into their operations. But like Nikunj was saying, they themselves are saying that it's a very evolving world when it comes to IT sector trends with AI, cloud migration, driving demand for large-scale projects. So I guess IT is... the sector back home is in one of those transitionary phases, and I don't think you can really slap a correct multiple at this juncture to IT, given how dynamic the environment is. But let's talk about our markets. We will discuss, of course, Accenture and what it means for IT services as well later on in the show. But Naresh, made it back to 23,200. Next week is going to be a truncated one. What's it looking like?
So it looks like a positive move across the board. So we've seen good recovery. Yesterday, it was more about large caps than about the broader markets. But one of the price points which we look out for is that trendline resistance around 23,200. We are knocking at that levels, and the last major swing high is at around 23,800. So I'd expect a day or two of pause, given that we have had 3 strong days on the Nifty, and maybe broader markets take a better day today. So overall, the bias is now shift towards 22,800 as a support for the near term, and 23,800 remains the major resistance. And it could be a slow and steady move. For now, a couple of days of pause could be normal.
Couple of days of pause could be normal. Kunal, can I just, let's say, contradict it for the sake of it, which is that the market has rediscovered momentum. There was only short selling, and everyone was on the same side of the board. When you see this kind of an FI data, where that has been the biggest bugbear, psychologically you think you want to cover your shorts then. So what are the chances that short selling moves to long buying now? So the market moves from oversold to neutral, and then from neutral to what's the word you want?
Overbought.
Overbought. Could that happen?
Yeah, it could happen, and I think we could now.
Will it happen? Naresh doesn't think like that.
No, I think it should happen, because these are phases of market trends also in respect of bounces. I think the prime reason for that is the indicators were extremely oversold. The sentiment was extremely pessimistic for the markets. And the most important data when we look at this, the FII index future. So that's the first benchmark which we look out for in terms of how much has been the withdrawal of positions, both in terms of shorts or longs in terms of the previous trends when the markets were down. And now we are looking at short positions being unwound, we're seeing unwinding of positions on the short side from the FIIs. But that's happening on a very marginal scale over here. For example, I think day before yesterday, there was just 9,400, 500 contracts which was unwound on the index futures. These are very small numbers when you look at this in the context of the previous trends for the index when the short build-up was happening. So which means that the extent of short covering has not yet kicked into the indices, and that I believe could be the next leg of uptrend, which could fuel the next leg of uptrend for the index.
If you like this video, then like, share and subscribe to ET Now.